Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, November 2nd, 2022. We're also doing the daily Apple report. Don't forget to watch that on a day-to-day basis through the month of November. And please click like and subscribe each and every time you watch the daily Tesla report or the daily Apple report. It helps us out a great deal in being found on YouTube. Subscribe if you haven't. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time this content is uploaded to our Wicked Stocks YouTube channel, which is every day. And share the videos, if you would, with friends and colleagues. Let's jump into the charts. Take a look at this daily chart, kind of an opened up version of the daily chart that about 4 or 5 days, trading days ago, we settled above this classic channel top. A descending flag at the bottom of a move. Closing above it is a pretty good setup for recovery. And so I'm showing a 2 to 3 week buy signal that still remains in effect above 219.59 that if tested today, for instance, can contain selling into next week, and above which the mid 260s remain a 2 to 3 week target. Now, inversely, if we close back below 219.59, the rejection of such a classic buy signal is in itself a valid sign of weakness as we move into later November. So that is our go with as well to the downside. Closing below 219.59, the 174.19 to 182.59 region becomes a 2 to 3 week downside objective. That is long-term support, able to contain selling through Q1 of 23. And we can come off of that area nicely, possibly well into next year. On the way down, well, let me take a look at other charts here to say, actually, I want to round out 219.59 and show you that is also, at least today, corresponds with a short-term rising channel bottom that's at 219.93. I rounded this down to 219.59. We could stop at 219.93 for the day, but they're so close together, I'm just going to call it 219.59. Now, if we open and hold below 233.81, which is the high from about 4 days ago, it's a level we did push through on Tuesday. If we hold below 233.81, we can today perhaps test 219.59. All of these levels, by the way, these minor points have been carefully chosen, well suited for aggressive day traders. But if there's a trade for the day, it would be bottom picking perhaps the 219.59 to 93 area, where we could bottom out for the week, possibly into later November, because above which, as I say, the mid 260s remain a 2 to 3 week target. And once again, breaking, well, this isn't once again, I'm going to go with the intraday activity. If we break or open below 219.59, 213.90 is likely. I don't have that labeled here, but it's nothing more than the high of the low from a week and a half ago or so. The high of that low, the actual move low, is 213.90. And if we break 219.59, you should expect 213.90, and that may be it for the day. And as I say, closing today below 219.59 does indicate this 174 to 182 handle long-term support within several weeks. We should, by Friday's close, test 206.85 to 204.99 if we close today below 219.59. The 206.85 level is the May low. We took it out, actually, over the last few weeks, and we even closed below it. The low settlement price was 204.99. That's also a low settlement price on the weekly chart. This was a Friday settlement. So I'm calling this sort of a 2-point range of support, becomes a 2 to 3 day target if we close today below 219.59, and we could bounce nicely here for a day or two. But as I say, that rejection of a longer 2 to 3 week buy signal, longer term for some of you, many of you who are day traders, the rejection of the buy signal by closing back below 219.59 should carry with it bearish continuation over the next 3 to 5 weeks or less into the 174, 182.59 region. Let's talk upside today, that if we do push through the 233.81 area, we can today, where are you? we can today test the 242.92 3/8 upside Fibonacci, which I have as still a session containment level. We obviously didn't test it yesterday, but if we push through 233.81, 37.39 is nothing more than Tuesday's high. I've got a little bit at 39.70, but 42.92 in reach today if we push through this high of 233.81 today. And we may well. We are still in buy signal mode, believe it or not, above 219.59. If we close today above 242.92, well, I would expect then 256.62 within a day or two. That is the 50% upside retracement. But for the day itself, and we're not going to see this today, but I'm labeling it nonetheless as a 2-star resistance, able to contain 2 to 3 day highs when tested, is 252.81. The funny thing is it's rising at such a steep pace that over the next 3 or 4 days it actually converges with our 2 to 3 week target at 264.33. So closing above, there's another way to look at it. If we close above 242.92 today, we should tomorrow or Friday at the latest reach 256.62, and by the end of next week, this 2 to 3 week objective at 264.33. Trying to think if there's anything else that needs to be said, and I can't think of it right now. I do have SPY charts and triple Q charts. Take a look at the triple Q, of which Tesla is a part. It remains on the defensive through the rest of the year and into Q1. This is a weekly chart below the 292.21 to 298.97 area. The Q needs to settle above this zone to indicate a good low through Q1, then expecting 3 to 5 months bullish continuation to 353.76. Until then, this is a market to be sold longer term in the 290s. And the SPY is saying similar things. The SPY actually closed at, or just below, I should say, its descending 2/3 speed line last Friday. This early part of this week, we've pushed through it, but we have to see how Friday plays out. If the SPY can't close above 387.18, it remains on the defensive as well, like the Q, through the rest of the year. And that is really all I have to say for Wednesday's Daily Tesla Report. Please click like and subscribe. I'll be back tomorrow with Thursdays. You have a great day.